Not everyone is making huge profits when selling their property in Dubai. In fact, if you look at the statistics over the past 10 years, around 50% of sellers lost money when selling their property.
The share of people selling at a loss varies dramatically depending on the year in which they sold, in line with market cycles. Property prices in Dubai remain highly volatile compared to other more established property markets. The last two bear markets after 2008 and 2015 saw drawdowns between 30 and 50%, and buyers who bought and sold at the wrong time realized disappointing returns. For example, 76% of people who sold their property in 2020 made a loss, as many of them bought during the boom years between 2014 and 2017. For clarity, these figures do not take into account the 4% DLD property registration fees or real estate agency fees. When you take these additional costs into account, losses are even greater. These numbers also do not look at rental income. So if you rent out your unit, you may be able to generate an additional net rental yield of, on average, 4 to 6% after fees. Contrary to what many real estate agents promise, the average net rental return in Dubai after service charges and taking into account vacancy rates is around 5%, with only a small percentage of properties earning above 6% net. Some property speculators commonly leave their properties vacant, as it is easier to find a buyer for an empty unit. In that case, there's no rental income, but additional costs, such as building service charges, accumulate losses. Let's look at the data separately for apartments, villas, land, and commercial property. For unbiased analysis of the Dubai property market, visa applications, company setups, and international tax optimization strategies covering 100 plus countries, visit thedubinavigator.com and book your free consultation today. Comparing apartments and villas, we see that consistently over the past 10 years, higher proportions of villa investors resold their units at profits compared to apartments. That's due to historic undersupply of villas relative to apartments. In Dubai, the term villa is commonly used for townhouses, semi-detached houses, and fully detached houses. Using the term villa for a townhouse or terraced house is ridiculous, but that's the way it is here in Dubai. Looking at land, we see by far the best returns, with sellers overwhelmingly selling at a profit, even during the last market bottom in 2020. This also further supports the fact that across the world, not just in Dubai, it is usually land values that appreciate, not the building structure. The physical building, the bricks and stones are depreciating assets, similar to a car. They become worth less over time, as they become outdated and require repairs. Land, however, particularly in good locations, tends to go up in value. Commercial real estate in the UAE is widely hyped to be better performing, in contrast to other international markets where office space in particular currently underperforms. However, even here we see that over the past 10 years around 50% of investors sold at a loss. With property prices at record highs, anyone buying today is at high risk of mediocre or below average returns over the next few years, just like people who bought in 2015. That's especially the case for people buying apartments and off-plan properties. Off-plan properties, that means units that are still under construction, currently sell for higher prices than existing ready units, even if you adjust for quality and location. We explain this phenomenon in another video here on our YouTube channel. As these off-plan properties get completed, they will likely struggle to maintain their price premium compared to existing stock, and thus may suffer from below average returns in coming years. Developers and real estate agents don't like us because we provide unfiltered analysis of demand and supply data for hundreds of thousands of properties across Dubai. We don't sell any properties and don't earn commissions. Visit thedubainavigator.com and book your free consultation today on how we can support you.